What's up, everybody, and welcome back to the Traderlink Masterclass. I'm Max Pitts, and this is Trades and Gains, where we teach you how to read the market like the institutions who move it, but with fewer degree requirements and way fewer sleepless nights. Today, we're diving into one of the most slept on but insanely powerful modules inside Traderlink, Market Tide. If you've ever wondered, where's the real money flowing right now? Are traders buying calls or are they dumping them? Are puts being loaded or ignored? And is premium shifting before price moves? Market Tide answers all of that in real time. By the end of this video, you're going to understand exactly how Market Tide works, how to interpret these flow lines, and how this tool predicts SPY's direction before price reveals anything. Now, what is Market Tide even? Well, it's basically a real-time premium flow tracker. It shows you where money is physically moving inside the options chain. Not guesses, not signals, not contracts, not speculation, actual premium. Here's what each line on the screen represents. Our blue line here, that is going to be SPY spot price in our example. Your standard boring price, but it becomes very interesting when you compare it to the flow. Now the green line here is going to be our call premium, the cumulative. This tells you how much money is flowing into calls across the entire chain. If it's rising, traders are loading calls. So as we can see here earlier, we saw people starting to load calls. Now as the day went through, it started to fall. And when we see falls like this means calls are being sold or closed. Now our red line, which is the top line from today, it's the same idea but for puts. Rising equals more protection or bearish bets, and when we see these little spikes down, this means unwinding puts or losing interest. Now the light green fill, which is the bottom down here, this is going to be our call premium flow, or aka aggregate. So our aggregate down here is going to show overwhelmingly who is winning the battle between calls and puts. So as we could see this morning with SPY, we saw a pretty bullish skew with calls, and then we had a flip to bearish here around 12:47 today that kind of bled out through the rest of the day. And that's what that red fill is going to tell you. So this is showing live bearish pressure. The green curve, this is going to be our aggregate premium. Again, this combines everything, calls and puts, and it gives you real sentiment in real time. Now let's talk through the exact Market Tide chart that we're looking at today. And this is where the magic happens. So spot price was weak and choppy all day today. We opened around 683 to 684. And then we had a dip to about 679, 680 down here. And then it tried to bounce, but it kept failing at around the 682.70 spot. So it ends up ending weak here. And on its own, fine, whatever. But let's go ahead and look at the flows in this. So call premium collapsed all day today, as we mentioned earlier. So we can see with these green aggregate line, it's starting to just decrease throughout the day today. The green call premium line is trending down from the moment the market opens. The translation of this is calls are being sold, unwound, dumped, liquidated, whatever verb you want to use. It's all bearish though. No one is betting upside, and dealers are short gamma. Upside is going to become harder when you have a situation like that. Now, for our put premium, we saw this red line. It was pretty much flat early, so not a ton of sell-offs. And then we had a surge around, I would say around 11:41, it looks like. And the puts are quiet and not much was happening. And then all of a sudden in the afternoon around 11:47, we get a nice little spike upward. This is textbook hedging, bearish speculation, downside protection, institutional concern. Whatever the reason, more money was flowing into puts today. Now, our aggregate premium, the big curve, it just slid all day today. We can see that we opened up bullish here, and at around 12:47, we had our final flip. We can also see this here when these two lines cross over as well. Now, when aggregate premium trends down, that means net money is leaving bullish bets and flowing toward bearish bets. And today it was just sliding, sliding, and more sliding. Even the few bounces we do see, there were no follow throughs in premiums. That's a bearish pressure cooker. Now, the divergence, this is the moment where the market tide proved itself. SPY tries to bounce multiple times, but during those bounces, call premium is still dropping and put premium is still rising. That's a bearish divergence example. And what happens afterward? SPY breaks lower exactly in sync with premium flow. Premium flow is what is going to lead that move that we're looking for in the market throughout the day. This is why market tide is a cheat code. So now, how do you exactly trade with market tide is your next question. And this is how you level up. These are the strategies professionals use. 1, follow the aggregate curve. If the aggregate premium is trending down, avoid longs. If it's trending up, avoid shorts. Simple, powerful, and yet very effective. Strategy 2, look for price versus flow divergences. Price up plus premium down equals bearish divergence, and that is going to create a short bounce. Price down but premium up equals bullish divergence, which means buy the dip. Today was an example of bearish divergence. Strategy 3, watch for late day put surges. If put premium surges into close, tomorrow often opens weak. This is institutional hedging behavior. Next strategy, number 4 and final, is combine market tide with other Traderlink modules. You could use DDOI plus market tide. This will show you dealer positioning plus premium flow, which is elite confluence. You could use footprint plus market tide, and that equals premium flows and actual order flow aggression. And volume profile plus tide equals structure and flow alignment. Now, final thoughts here before I let you go and let you out of class for the day. Market tide looks simple, but it gives you something most traders never see: real-time money flow across the entire options chain. When you know where money is flowing, you trade with intention, not hope. This is how institutions position. This is how pros anticipate moves. And now you can do it too. Anyways, that's all I have for you in today's episode. If you found this helpful, make sure you smash that like button, subscribe, and comment below what you want in the next Masterclass episode to cover. I'll see you guys in the next one for episode 5. I hope you've been enjoying this series as much as I've enjoyed making it, and have a great evening.